This is Alan Bush with the Daily Financial Forecast for Tuesday, October 4th. Starting out with the stock index futures, looks like this market is holding up very well, even though we did have comments from a couple of Fed officials that were quite a bit on the hawkish side. Mesker yesterday and today, Lacker of the Fed, with some comments that suggested that they could be raising rates earlier than some analysts had anticipated. And yet stock index futures are performing rather well today. Also, we do have third quarter earnings season starting on October 10th with Alcoa to report after the close. Even though the Fed is now apparently a bit on the more hawkish side, we still think that the main trend for stock index futures is higher. Moving over to the currencies, all of these hawkish comments causing the dollar index to advance with strong gains there. In fact, the dollar index appears to be the prime beneficiary of all of this hawkish comments, all of this bullish sentiment, in a sense, on the part of the interest rate outlook. Our feeling is that the dollar index will gradually work higher. I think we're seeing a bit of an overreaction on the upside to the dollar index to these comments. But in any event, we do feel that the dollar is likely to work higher in the longer term, especially since the Fed is the only major central bank that is on track to raise interest rates. All of the other central banks are either on hold or likely to add more accommodation. Also, we are seeing the pound continuing to come under some pressure. This after the UK Prime Minister yesterday calling for an early exit to the European Union, possibly by next March. Also seeing the yen lower as interest rate differentials turn against the Japanese yen, with the yen down now for the fifth consecutive day. In the commodity currencies, the Canadian dollar and the Australian dollar both lower as crude oil moving a bit lower. However, we are seeing the Australian dollar gaining on the Canadian dollar today a little bit, and we do feel that longer term the Australian dollar will continue to advance against the Canadian dollar, so the Australian dollar is in good shape. Also, we had the RBA meeting today, and the Reserve Bank of Australia left interest rate policies unchanged as expected. Now, moving over to the interest rate futures markets, virtually lower across the board with most of the pressure at the long end of the curve. Just as the hawkish comments from Fed officials supported the dollar index, those very same comments putting pressure on the 30-year bonds. We still feel that the long-term trend for bonds is lower as the inflation levels gradually heat up globally. And in the precious metals, the 1,300 support level in the gold has been taken out now, and a lot of sell stops apparently have been hit. This move, I believe, primarily is due to, once again, all of these hawkish comments from Fed officials. So a lot of sell stops hit, a lot of liquidation. However, if we are right in our thinking that inflation is coming back globally, that this is not the beginning of any new bear move in the precious metals, I think we'll probably consolidate over the next couple of days, build a base, ultimately head back higher again for both the gold and the silver market. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.